Good morning, friends, and welcome to the pre-market view. We have seen smart pullback in the US markets after the initial weak start on the back of extremely positive housing data, and the housing prices in fact rose almost about 6.7%, which is the highest that we have seen since last about 4 to 5 years. Also, the statement from Ben Bernanke that the bond buying program is likely to continue till we see some stability in the job markets. However, European markets continue to reel under pressure on the back of political uncertainty and the doubts on the continuity of the austerity measures in Italy and the possibility of that contagion spreading to Spain and other economies. So, there is some amount of uncertainty in the Eurozone. And when we look at the Asian markets today morning, most of the markets are quiet. However, Japan is down almost about 0.75%. In terms of flows, friends, FIs were net buyers in the cash market to the tune of only about 25 crore. The domestic institutions were sellers to the tune of almost about 230 crore. And in the index futures, the FIs were net sellers to the tune of almost about 1250 crore, which is a huge number in the current market scenario. Back home, our markets continue to slide down and we closed substantially below 5800, and some important levels of about 5800 and 5820 on the Nifty have been broken, which is quite negative. Also, in case of Bank Nifty, we have seen that the important level of about 11,965 odd, where important averages lie, has been broken. So definitely, technically, the market is not looking too good. The only pocket where we saw some amount of strength was the telecom pack. Bharti and Idea both were strong, and the IT pack, where TCS, Infosys and few large cap names really held out pretty well. But the rest of the markets had a major carnage, be it banks, metals or any other stocks, which is definitely not comforting given that we are just a day away from the important event like budget. On that note, let me invite Sadhana to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning, friends. Let's have a view on derivatives. In yesterday's session, markets started on the negative note with a gap of around 25 points. And selling pressure was continuously seen in the market as Railway Minister Mr. Pawan Kumar Bansal delivered its first railway budget, and followed by a drop in the European markets. After that, from third consecutive days, FIs are net sellers in the market. Yesterday also they were net sellers of around 185 crores in F&O segment. And we have seen around 47 lakh shares were added in the open interest with marginal increase in the cost of carry. We have seen long accumulations has taken place in yesterday's trade. In spite of FIs were net sellers in the market. On the options front, if we talk about FI 5600 put strikes price has seen a good number of activity, followed by 5700, 5800 and 5900 seen a good number of activity in call strike side. So going forward, 5800 would act as a hurdle in the market. As we are trading below a VWAP of 5865, so our bias for the market is negative. Lower range for the market would be 5700 to 5650 and higher range would be 5865. Market today, we might see market would be in a lackluster, and we see some consolidation in today's trade, and every rise in the market would be taken as an opportunity to go short. For intraday perspective, one can go long on India Cement with a stop loss of 83.70, and one can go short on Aditya Birla Novo with a stop loss of 1065.15 and Biocon with a stop loss of 283.35. Thank you.
Here are the important news and events that we are tracking today. First of all, the implications of railway budget on the cement sector. There has been an increase of about 5% in the freight rates for cement, and that works out to about 2 rupees per bag of increase in cost for the cement companies, which is likely to be passed on to the consumer. So no major negative effect on the cement companies per se. Also, for steel, coal and power sectors, the increase in the cost because of this freight hike could be anywhere from 1 to 3% depending upon the distance, which again is not going to be that material from a overall margins perspective. Unitex, some positive news as CBI is inclined to close the probe into the Unitex MD's conversation with the 2G prosecutor of CBI, but it's awaiting the final view from Supreme Court. We had seen a major crack in Unitex stock once this news came out. So there could be some relief for Unitex stock, but since Supreme Court has not given a final view on this, the up move may not be that significant. Sugar industry, some negative news, as now there are indications that the decontrol of sugar may be delayed because of the lack of clarity on the subsidy burden and the increase in the sugar prices that may happen post decontrol. So this could be a bit of a negative for sugar companies like Renuka Sugar and Balrampur Chini. Havells India, some positive news, as US based Janus Funds has picked up almost about 5.16% stake at a price of about 420 crore. So one can go long on Havells with a stop loss of about 625 and a target of about 659 to about 672. Hindalco, some negative news, as the continuation of illegal strike by the workmen at its Silvassa plant has forced the company to declare a lockout there, which is negative for Hindalco. One can go short on that with a stop loss of 104 and a target of about 99 to about 97. That's it from all of us, friends. Have a nice trading session and see you tomorrow at the same time.